Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, we're going to go over the continued sideways action and the red across altcoins and of course on Bitcoin a little bit as we have had the shake up and shake down once again. And guys, this market just continues to play out the wedge that I was showing you in the last episode, really making just no decision whatsoever. However, last Thursday I was suggesting that we're likely to get a pump into that $29,500 area once again, and that we would really be looking to try to flip that area. And if we are able to flip that area, then I would see that as something very bullish, and we really did need to get that. Probably Thursday or Friday, it was kind of time essential. And I'll tell you why a little bit later when we do the analysis on the 6 hour. But we didn't get it. The market just did not create that support. The bulls just did not step up and the buyers just did not step in. And so we immediately got smacked down, and that's basically what the market has been facing today, and why we're seeing all that red in the altcoin market, as well as this. Just we're pretty much the same price that we were last week, but just a little bit down here. And now we're just struggling to get back up. So if I go ahead and turn the 6 hour levels on for you, you can see what we've been going through. So these are the old levels. This is what I was showing you in the previous episode. And you can see here that our goal was to take that bullish control zone on the 6 hour. And unfortunately, we just got rejected. 3 6 hour candles in a row. We weren't able to build that candle structure above the bullish control zone. So where did we get sent all the way back down to? Oh, hey, look, the alpha momentum pool, right? So we had that marked out back here, where we were suggesting we were likely to get a pump off of it should we be able to flip it into support. We did flip that into support. We got that pump up to the bullish control zone. Gee, wouldn't it have been nice to have these levels on your chart? Right? Look what happened, Alpha Fam. Like we went straight up, straight down, straight up, straight down, and we didn't violate my levels. We respected them quite accurately. And, of course, the market did have a little bit of a panic. Everybody seems to think that the market's just going to implode in one candle. And so the market kind of panicked. They didn't really quite realize that we have support on the diagonal of the wedge that I was showing you. So if you had marked out the wedge that I had shown you, then you probably would not have been panicking. You probably would have been buying, right? And buying because we're likely to get a bounce there. And then, of course, we came back to the alpha momentum pool where, once again, we're trying to get a little bit of a push up. But unfortunately, this volatility pivot is now expired. Okay, so this shake up and shake down, whenever we have these type of shakeouts in the market, it really distorts where the volatility pivot is. And so I do have to give an update for you, because this was a failure. It was a rejection. Okay, and so there are consequences to that. And here's our new 6 hour momentum threshold, guys. Okay, so it's a much more clean to read this time. But what will you immediately notice is that the volatility pivot is all the way up at 29,695. So essentially 30,000. You could say we would really want to get above that, because bulls don't get into control until above 29,800. And so just to be sure, we want to be above 29,700, 29,800. So we just can call that in general 30,000 is now the magic number. We no longer have the volatility pivot at our back. we're really going to be looking at a any type of a mean reversion if we do try to tag this volatility pivot, and another failure could easily send us down to the bearish control zone, just because of how many times we've failed. And right now you can see that we're struggling to hold on to the alpha momentum pool. We're struggling to hold on to the neutral point of control. And so guys, this chart is just looking weaker and weaker the more we're shoved into the corner of this wedge. The lower time frames are now starting to work against us, and you're seeing that pressure by the higher time frames start to work its magic in terms of just swatting this chart down. So, just on the basis of how we're set up right now, you might hypothesize that we could get some type of dip out of this wedge to the downside, maybe an attempt to stay in it, and then who knows, maybe a greater push to the downside. Again, we really have to take out that $29,700, $30,000 area, put candle structure up here in order to counteract all of these shakeouts and how it's kind of been defeating the confidence of the market. So this is an indecision triangle here, an indecision wedge, and we're just waiting to see, does it break to the downside or does it break to the upside? And the last move, of course, was rejected, so it's now the bears' turn to try to figure out what they can do. Let's go ahead and just note where the bearish control zone is. It's $28,180. So we really want to hold above that. If we do have a flash dip down, sort of like this wick over here, right? Sometimes we get these stray wicks. This isn't a perfect science or anything. There's a little bit of an art to finessing these charts. If we do get a little bit of a wick down here, then we really don't want to put candles underneath 28,180, or there's a good chance that we're just going to continue dramatically to the downside. And the neutral point of control is at 28,969. Nice. And so, guys, we really do want to try to flip that area, and especially above 29,174 if possible, just to get that bullish structure that could perhaps have us attempt to take out that volatility pivot and maybe flip this wedge to the upside. We're not really developing that structure just quite yet that I'd like to see in terms of that inverted head and shoulders. But we are doing what I did hypothesize, which we did have a pullback, a little bit of a scare to it. And if we do just get a pump and break this wedge to the upside, then again, guys, I'm gonna have to just retain that potential for bullish optimism, because I'm telling you, we're going to have an inverted head and shoulders if we end up, actually doing this little flip right here. And then what's the measured move on that? Well, let me get out of log just so we have it pretty accurate. Then the measured move on that is going to be something like 31,500, which will take us clear of this wick over here. And then we're free to try to go for, $33,000 should we be able to get ourselves over there. But guys, you can see that this area of the chart is still potentially building bullish structure. It's just that the more we're getting wedged out here, the more it's pushing its luck, and the easier it is for it to actually break down as this volatility pivot moves to the upside. So on a 6-hour basis, I am a little bit concerned now. I don't like us being underneath the alpha momentum pool. We've got our toe inside of it right now. but we've been underneath it, okay? And I don't like the volatility pivot being above our head while we're underneath the momentum pool. We really need to flip that neutral point of control back, otherwise we're just bearishly retesting it. And again, we need to get above that 29,100 and let's just call it 75. Okay, we need to kind of hang on to that area if we want to have that chance for a push. Guys, let's go ahead and take a look at the new daily setup. The new daily setup does look, it does look all right in the sense that our volatility pivot is still down below us. And so this is going to, again, give us that chance to build up that inverted head and shoulders on the 6 hour. But we are getting dangerously close to the neutral point of control. We are currently under it on the 6 hour, but we're just barely above it on the daily. And breaking down under that, you could tell that it wouldn't be good. But you can see where things start to break down on the daily underneath 28,000, let's just say $400. Then there's a good chance that we could just lose everything and head down to a 26,500 or retest our lows at least on these horizontal support levels. Guys, we do need to flip the momentum pool at 29,121 on the daily closing basis in order to get that chance to have that volatility at our back, plus being on top of the momentum pool, adding momentum to our push, and then that could give us that chance to reach, like I said, 30,500, where bulls have the chance to take control on the daily. So you can see some asymmetry between the 6 hour and the daily. The only difference is that the 6 hour is being frustrated a bit by its volatility. Guys, let's go ahead and take a look at the old weekly structure here. I'm still on the day chart, but I just want to show you how price action has been moving on the old weekly chart that I had. And as you can see, we did hold the alpha momentum pool. We popped up to the top of the wedge, basically bumped our head into the volatility pivot. We weren't able to flip the volatility pivot, so we've been suppressed underneath it, right? And however, we have just been able to push off of that momentum pool twice, and we're able to hug the bullish control zone. So again, guys, these key levels that I give you, look at how they get tested. Look at this wick right at the bottom of the momentum pool. Look at this wick right at the top of the general continuation and the momentum pool. Look at this wick right at the wedge of the wedge, basically right at the edge of the wedge, and then of course, it basically would have extended up to that volatility pivot should this wedge not have been forming. And then we did come right back down to this bullish control zone where this candle and this candle, all of these candles are just sitting on top of it. So I am giving you significant lines, just in case you have any questions about this kind of strategy, this way of looking at the charts. It does work quite well. And you can see that all of these lines here were supporting us so that we didn't retest the neutral point of control on the weekly. And we did hold that kind of bullish area. We're still in it on the weekly. The weekly does close in 18 hours, so let's go ahead and get us some new lines. Again, we've been on the daily chart in the background, so I'm just going to go over to the weekly. And on the weekly, you can see that we're just swimming around in the alpha momentum pool with the bottom of this candle, uh, having the opportunity, the possibility to close above the bullish control zone. You can see just by a hair, okay, guys? So again, I'm just giving you these key levels, and it just so happens that the price action is corresponding with my key levels once again, and that bullish control zone that we're going to be looking forward to is 28,908. That's the number that we really want to stay on top of for that chance to continue to push up. But unfortunately, the volatility pivot is at 30,170. So just again, that volatility pivot is above us, and I don't like that. Should we drop below the momentum pool underneath 28,300 and definitely underneath 27,920, these two lines kind of work together often. Uh, this is a little bit more of a conservative drawing, but should we get in this area down here, then there's a good chance that we could fall all the way down to that $25,000 area, maybe even 24,500, where we do have all of this liquidity, this free liquidity for market makers to kind of snag before we go on our way, perhaps back to the upside, or maybe just sideways, okay? Maybe just sideways. Or we could also break down. But anyway, I would expect some type of interaction in this area. If we do throw on the Bollinger Bands, we can see that the median line is right there at the neutral point of control. And so that does suggest that I am getting these lines accurate here. And if this chart just wants to touch back to the Bollinger Band core, then we are going to perhaps see that $24,500 area should the 6-hour and the weekly chart be prescient in predicting that volatility could randomly smack us to the downside should we lose those bullish control zones, okay? And right now, I think all eyes are going to be on what the weekly is doing. And if the weekly loses that bullish control zone, it is going to be a big deal because we've been in the weekly bullish control zone for quite some time as we've been pushing up in the charts. And so losing it, it's just not great. And then we would be looking to see if here at the neutral point of control, basically the center of the Bollinger Bands here, if we were able to get this buy wick action that we got here, where it was just all bought up, and I wouldn't be afraid to buy there, but some people might be because of other things going on in the market. And if there is a weak response, then we would be afraid that perhaps we could dump down and test that 22, 21, this kind of $18,000 level, $17,000 level. Bears don't get into control until we're under 17,228. This would essentially make a double bottom on our chart should we do something like this, okay? And it just take a lot more time for the markets to heal. We could wick underneath there or something, maybe make some type of bullish divergence before continuing. Some people would think that we could go all the way down to 10,000, 9,000. Yes, these are actually possible. On the monthly, there is mathematics that shows that 9,800-ish is possible. But I don't think I really want to get into that right now. Basically, we're just looking to see, do we get a bullish close above the bullish control zone tomorrow on the weekly? And even better, do we get above that 30,170 on the weekly that suggests that we could also pump, right? Or are we going to not only have the volatility pivot at our back, but also break down from the bullish control zone for the first time in a while, and perhaps even get pointed back down to the neutral point of control and retag the Bollinger Band line here? Guys, that's pretty much what I've got for you today. So I think I'm going to leave it there. I guess I could just briefly take a look at maybe the RSI with you. So if we were going to just take a look at some numbers for what could be possible, maybe we could take a look at the 2-week. Yeah, I think the 2-week, let's see, where did the monthly end up? No, that's too small. Let's look at the weekly. Yeah, let's look at the weekly here. Let's see, can I turn some of this off? Yeah, let's turn off that. All right, so I have some figures here, and basically what we can see is that we have these trends on the RSI, which if you just look at the top of the RSI, essentially there's this angle that goes to the very top. The very top of this, should we get to like a 97, 98 percentile, that's kind of an insane price. It's going to suggest Bitcoin at $230,000. Now, the more likely target for a highest target is somewhere along the line of these lower trends, where you see a peak here, peak here, peak here, you see a peak here. And of course, this had two extreme tops, this had one extreme top. And so if we just don't get that extreme top at all, the diminishing returns over time on an aging asset, then perhaps we could look at this kind of middle line here as a more likely target should we enter a true bull run, and that would put us somewhere around 85, okay? And should we have just some type of exuberance above that, there's different ways to calculate it, but you could say anywhere from 85k to 105k would be a pretty reasonable projection should we have a true bull run. Now, one thing that you'll notice is that between this bull run and the mid-cycle rally, and then the next bull run that we had, this last one, the mid-cycle rally only stopped right here on the RSI. And so should we continue to push up on the RSI, then that same level for another mid-cycle rally, because maybe we're not in a real bull run, we're just kind of like building up consolidation overall in a bear market rally, then that would be a projection of around 45k. So that would suggest that maybe 35k, maybe 42k, maybe 48k, maybe even 55k. Like as an extreme. Like these numbers would be well within the range of what we did in the last bear market rally. And so there wouldn't be anything unusual about tapping 45,000 and then having a massive drawdown where we retouch our lows. And if you take a look at where our lows were located in the previous bear market rally, you can see that we essentially hit two trend lines that were originated back here in 2015, and they were respected at the bottom of this market as well. And so what would I have to suggest is that on a projection basis, that we could hit one of those two numbers should we have a drawdown after a rejection in this area on a mid-cycle rally. And that would bring us down to 17,000. It could bring us down as low as 9,500. So those of you who have hopium that you've kind of missed this bear market rally and you want to have those juicy numbers to buy back in again, then I have to tell you 9,500 is still on the table. And 17,000 is very realistically as well. Now, these two lines actually got tapped before the bear market rally, and the bear market rally only came back to the upper band here in the last cycle. And so that could suggest that this higher number is the one that's going to be hit, the 17,000. Should this fractal, which looks pretty convincing so far. Should this fractal play out, then these are the numbers I'd really be targeting. Where let's say that we continue to push in May, we don't have the pullback just yet, then perhaps we get somewhere around that, that those mid 40Ks or whatnot. And should we have a pullback, let's say late May or into June or whenever, then perhaps we're going to have a pullback to 17K. Now, these numbers change dynamically over time. Obviously, the top of this market isn't the same price as the top of this market, isn't the same price as the top of the future market. And so I can only call these numbers, based upon the math for right now. If it was happening today and we were to hit these levels on the RSI. But of course, in the future, these things can vary widely. And so I just can't be 100% certain of any specific number, but we could say thereabouts, right? Somewhere in that area. And so again, guys, 9,500 might be hopium. Your kind of $1 million targets might be hopium. 85K might be the next bull run, right? Mid-cycle rally, and the next bull run might be where we're actually realistically targeting. And then this bull run, this bear market rally might actually just be mid 40s and then come back to a 17 with just a hopium to a 9,500. Guys, I think that I will definitely leave it here. I think I've given you a lot to think about, but I'll probably touch on this again in a future episodes. Just wanted to give you a bit of a hint of it, and that's your alpha for the day. Stay safe and happy trading.